Welcome to the Texas Business Broker, where we bring you Texas-sized insights for business brokers, exit professionals, business buyers, and sellers alike. I'm your host, Josh Carnes, with Line Business Advisors, and the current State Vice President of the Texas Association of Business Brokers. This podcast is your go-to resource for navigating business sales in Texas. Let's dive in. All right. Welcome, everyone, to another episode of the Texas Business Broker. I am excited today to have someone who you might already know, Jared Johnson with First Internet Bank. Some have referred to him as the Texas business banker, right? So it's a great addition there. Jared is a recognized industry leader. He has completed over $750 million in SBA lending transaction during his career spanning over 18 years. That involvement has given him a thorough understanding of the impact in SBA lending and small business acquisitions, especially for some of the stuff that we do here in Texas. And so Jared is primarily a business acquisition lending specialist. He's been named SBA Business Development Officer of the Year multiple times by Coleman Publishing. Jared holds a BA and MBA and has acquired two separate businesses and sold one himself. An investor. He's another podcast host. He provides great information if you're not following him already. And because of his vast experience, he is asked all the time to speak and do podcast interviews and all of that. And so because of that, Jared, we're grateful that you're hopping on the Texas Business Broker podcast. And welcome to the show.
Thank you very much. I really appreciate you having me on.
Perfect. And so as we dive into this, I think by now, everyone and their brother has done an interview, done a podcast, or talked about the recent SBA updates that have hit. And so we might touch base on those, but I'm really excited when we started connecting on this and you said, hey, let's go a different route. And so today, we're going to be talking about the evolving role of searchers and how SBA changes are affecting the acquisition landscape and what it means for us business brokers and how we can stay ahead.
Yeah, me as well. Thank you.
I know I kind of rambled on a little bit about you right there, but why don't you take a moment, introduce yourself, and tell us about First Internet Bank and everything that you guys have going on over there.
Perfect. Thanks. Yeah. So, First Internet Bank, we're a preferred lender. I believe we're number 6, 7, somewhere around there right now on the kind of lender rankings. Usually do about 600 to 700 million in 7A volume. And a good majority of that is business acquisitions. So whether that's, your kind of searchers that I'm sure we'll talk about, or people looking that are a GM looking to buy or somebody looking to expand, we're happy to take on those transactions. We have a underwriting staff, closing staff that is heavily focused on it and really understands what it takes to get those types of deals done. We don't shy away from having a deal with not much collateral. It's very common for us to do the full $5 million loan amount with little to no collateral. So we're truly focused on the space, and it's been great. I've been here for almost 5 years now, and it's been really fun to watch everybody grow from a really small SBA department to one of the largest ones now.
No, that's awesome. Let's dive right into it, and let's start talking about searchers and search funds. What is the primary difference that you're seeing between a search fund and a traditional buyer of a business right now? What do we need to know?
Yeah, that's something great to cover. And I'll back up a little bit. So, having doing this for a long time now, it's kind of interesting when we started being approached by the quote unquote searchers or search funds. I would say it was probably around 2013, 2014. And I was having people reach out to me. And at that point, it was a very, very different lending landscape for SBA. It was not uncommon to have 25% down with maybe 15% seller carry, 10% from the buyer. Banks were not really excited about doing transactions over, probably about 2 million, and really, really were focused on having collateral. So at that point in time, when someone reached out and says, hey, I'm looking to buy a good sized business, and on top of that, I'm going to, have investors that are not going to guarantee the loan. They're going to put money in. And by the way, I've never owned a business. I've never ran a business. What do you think? So at that time, we were sort of like, no, this isn't going to work. What's going on? Everybody was kind of confused. And there was probably only maybe 2 or 3 true lenders doing acquisitions at that point in time anyway. So it was kind of interesting to talk to each other and say, what are you telling these people that are coming to you with this idea of some search fund that no one's ever heard of? And so we sort of told them, no, this isn't going to work if you're not going to have your dad's rich friends guaranteed that are going to put in the money. Go work, go do something else. And a lot of them, that's what they did. They went, worked in big consulting or private equity, investment banking, maybe became a general manager at a business in kind of a similar industry. And they all started to come back around 2018, 2019. And then I think we saw a big push in 2020, which was probably likely from a couple of different things. One was just starting to see it get more popular in some of the business schools. And then also just with the whole COVID and everybody moving and being able to kind of work remotely, people getting laid off, or people starting to see there's a different world out there where they don't have to work in corporate America in their office, stuck in there, 50, 60 hours a week. So we saw this big influx of deals and kind of more of the terms started to come out. I was definitely hesitant and almost a little annoyed with some of the terms at first. I remember my wife saying, "You sound like an old grumpy man." And I'm like, well, this is not how we do it. We're just buying a business. Like, it's SDE, not adjusted EBITDA. And it was just kind of going on and on. So I do feel like there was a point there where the search community was not doing a very good job representing themselves. And they were coming to business brokers and just throwing LOIs at everybody and then saying, I'm going to figure it out from there. And that was really not the way to do it. So naturally, we kind of saw this, battle between brokers and quote unquote searchers. I feel like now it's sort of cleaned itself up a little bit. The individuals that I'm seeing now that are coming out do have really good experience. They do have the access to capital. If they are raising equity, they've got some really good people behind them that they've already secured, that they've already, understood. And it sort of pushed out a lot of the people that maybe were kicking around the idea, but didn't really know what they were doing and kind of just thought it would be fun or it was a fad and didn't realize how difficult it is to buy and operate a business. So the searcher that we're seeing now is typically somebody that has usually some business school education, has worked in typically finance, whether that's consulting, private equity, investment banking, venture capital, been an operator for private equity, been working with a lot of veterans as well that were officers. And most of them have gone to some of the larger business schools as they've pushed ETA or entrepreneurship through acquisition. That's kind of been the whole thesis with getting their MBA. When they get out, they look for a business to buy. So we are getting a little bit better quality. And then I think some of the larger differences with them is that they're sort of equating the small to medium-sized business M&A to large M&A that they're used to doing in whatever role they were in before. So we're starting to see them kind of bring those ideas and philosophies down into the SMB space. So I know that was long, so I hate on my podcast when people just keep going, so I won't do it.
No, so this is all about us business brokers learning more and getting education. So you can talk for as long as you want, right? We're just going to soak it in. One of the things you did hit on, though, is especially that 2020 to 2023, which is only a couple of years ago. We as brokers were obviously having those internal conversations as well. And our conversations were almost the same point. Who are these guys? What is this they're trying to put in front of us? This doesn't make sense. They don't even actually have the money. How are they going to close this? And, and there for a while, though, those early adopter brokers, if you will, who tried to open up and do deals with these guys, they didn't always go well. And so, search funders for the longest time had a bad rap in our industry. And I'll even go so far as to say is they're still in the process of cleaning it up, right? So we get a few of these, and I think we'll dive into it a little bit, the difference between a funded and an unfunded, and the different terminology that they're throwing out, right? And so I think you hit the nail on the head. It's the cleanup of that has happened. And then the mix of private equity and these larger buyers coming downstream and dealing with those business brokers really has changed the landscape of deal structure. You hit on it a little bit, but they're not doing the normal SBA 10% down, 10% seller fine, which is also going away here soon, going to look like. But, so what are some of the deal structures that you're seeing these guys make? How much is it playing into SBA versus traditional versus my buddy's dad who has cash, which is a lot of this? Well, what are some of those structures that you're seeing?
Sure. Yeah, great question. And you're absolutely right. And what I've been sort of trying to push on is both sides, right? As I'm kind of stuck in the middle, right? I want brokers to be successful. I want people to be able to buy businesses. So I've kind of made it a mission to get everybody back on the same page. I was at an event yesterday in New York for searchers. That was one thing that I always harp on them is you have to understand you created a bad reputation over a certain period of time. The banks didn't help at that point either, because some of them went a little wild because of the higher guarantees and things, and did stuff that they normally wouldn't do kind of outside their box. Then we had rates, almost double. And so a lot of those clients failed. And so the banks kind of got out of it. So it did help with a lot of the banks that normally wouldn't do this type of lending kind of got out of the way of the ones that have been doing it. But yeah, it's just trying to get that reputation built back up. And I try to explain to them all the time, you have to understand how difficult it is to list a business, what you go through just to get the listing. And then from there, getting it on the market and dealing with sometimes 20, 30, 40 NDAs the first day. And you're trying to weed through and figure out, okay, who is the right buyer? And when everybody's coming to you with the same thing from ChatGPT saying, this is what I'm searching for, this is, what it is, you all have the same LOI, all this stuff, you can't tell the difference. They immediately want to just throw all of them in the trash and look for the old school buyer that we normally had. So trying to get them to understand that's what the brokers are looking for, but then also trying to work with the brokers to get them to understand it's not always that way. And this could be something that is really important to focus on. And I've said it a couple of times. I think in the next 5 to 10 years, I would guess probably 70% of your buyers are going to be this type of buyer and searcher. So the quicker we can get everybody on the same page, the better it'll be for the industry overall. And then, so to answer your question, traditionally what I normally see, and it's kind of always evolving, is a buyer will come in with some capital. As a bank, we like to see that they have some skin in the game, whether that's experience or bringing in their own capital or some collateral. We do not like to loan money to people that don't have their own cash. And, if somebody reaches out to me and they have $20,000, $30,000 and they're looking at a $4 or $5 million transaction and they say they're going to raise equity, I'm like, I don't doubt that you likely could, but you're not really putting everything in there other than a personal guarantee.
You can't even make the monthly payroll. So
yeah, exactly. And then from there, it's kind of looking at their background, right? What have they really done? Do they have the ability to buy this business, operate it? Are they going to come in day one and run all the employees off and scare them away? Obviously no one wants that either. So we're always kind of vetting them. But normally what we're seeing is the buyer, borrower, guarantor, whatever you want to call them, the actual individual who's going to be personally guaranteeing the loan, they're typically putting in, maybe 5% of the transaction and then raising the rest. So they'll raise anywhere from 5, 10, 15, 20%. And it's typically a mix. So we will have where it's family and friends that do have capital. Some of them come from family offices that'll say, hey, if you go buy a business, we'll back you, we'll give you the cash to do it. And then a lot of them are just raising from, true investors. which was some of the SBA changes, is going to be a whole nother challenge to work with. And we're seeing a lot of different terms there where they're getting step up, or they're having a rate, or they're wanting some kind of control and everything. And the SBA is trying to kind of control that a little bit, which I think is necessary.
Yeah.
But there are lots of funds, or just maybe accredited investors that want to put their money together. So either way, they're raising capital. They're having people put money in, sometimes multiple, from funds or individuals, their parents, their friends, kind of putting it all together, putting in some of their own cash. And then they're almost always asking for some form of seller carry, whether that's to help with the down payment, and as you mentioned, we're probably not going to see much of that anymore, or just to try to offset some of the risk. So we may see a forgivable seller note or contingent seller note that can be reduced if certain revenue metrics aren't met, or if there's, they lose a customer or something like that. But normally we're seeing 10% to maybe 15% from the buyer, and then 5 to 15% seller carry on top of it. And then we provide the debt for the rest of it.
I think you hit on one of the big pieces that doesn't necessarily solely impact these searchers, but I tell people we haven't done a deal in the past few years that hasn't had a 10% seller carry that is generally getting wrapped up for that down payment piece or some piece of that. So how do you see, looking into your crystal ball, how do you see that shift impacting some of these offers coming down? Right. I mean, that as we see here today, that takes place in a couple of weeks. So it's, are you seeing any offers already adjusting for these changes that are coming down the pike? Are we going to be workable, or is it an oh no?
Yeah, well, the changes did go into effect June 1st. So they're already there. Yeah. So, but normally there's a lag, right? So we'll say, okay, this is the new rules. This is how you have to do things. And then we kind of won't see that until end of July, August, right? Because of the amount of time it takes to get the deal on the market, get through LOI, all that fun stuff. So we're expecting to, and kind of what I've seen, because this isn't the first time we've made changes, right? This is a little bit more drastic and quick. Normally they say, here's some changes. We're going to give you, 60 days to tell us what you think. Then they'll go into effect 30 days after that. They were like, hey, you have 25 days and we're making these changes. Mm-hmm. So a little more swift, a little bit faster. But with that being said, whenever we've made these changes, there's usually a lag, and everybody kind of hems and haws, and then it sort of goes back to normal. But we've had it in the past where it was a 10-year requirement on the standby in order to count towards equity injection. Now, I would say 25% of my deals, that was probably what we would see, maybe a little bit less. And then, as you mentioned, when it changed to just 2 years, all of a sudden it exploded, and it was like 85% of the transactions. Sellers were a lot easier to get on board with a 2-year standby rather than full 10 or life of the loan. And so being able to, kind of look and say, how do we still get these transactions done? Is it going to be that sellers are going to have to understand that we're now going to start going back to 10 years? Maybe they're going to be comfortable with it. It may just kind of be a divide where you may get some of the transactions done that way, and then otherwise they're going to go back to just bringing in 10% equity. And then there's been a lot of confusion with it as well, where people kind of don't understand that if you're putting in the 10%, or having the seller and not having the seller carry on standby, that's okay. They're still putting in 10%. You can have a seller note whatever you want, as long as the debt service coverage works. And so that's where we're trying to do a little bit of education. And I'm kind of expecting it to go back to that, where most of the transactions will be buyer bringing in 10%, seller still carrying something, maybe 5 to 10%, but it'll be 5 to 7 years at 5%, kind of normal seller carry note. So we'll see what happens, but it normally takes a little while to kind of get people to calm down and say, oh, wait, I still wanted to sell. I still wanted to buy. And then, okay, well, this is the new rules. Let's see what we can figure out.
I think you also hit on too, some of the stuff that was happening pre-COVID, right? For those of us who have been around for a while, the reality is this is just a correction. It's not a massive change that we've never seen before, right? Deals were getting done prior to some of these interactions. And so it's, you really nailed it, is there's this learning curve, but at the end of the day, people like yourself, people, the brokers who have been around for a while, they're deal makers, and they're going to figure out a way to get these deals done. And doing deals is a team sport, and leveraging people who have been around for a little bit longer is how you get deals done. So that's probably the key to having someone like you in their corner there.
The one thing that I didn't like about it was I feel like when it was 10 years, everybody said, oh, okay, we'll do that. And then I felt like there was these handshake deals where they would start paying it after a couple of years. And obviously that's not, what we want to see. And that's not something that's allowable. But then when they switched it to 2 years, the seller said, okay, I can manage that. I mean, I just got a couple $1 million. I think I'll be okay for 2 years. They didn't have to have these handshake deals. And so they were actually following the rules. And that's what concerned me, was that now we're going to go back to 10 years where they may actually do 2 years with nothing and then start, paying them. And that's not something that we really want to see. So who knows? They change the rules quickly. They may change them again, but we'll see.
We've already seen some interesting offers like that have essentially attempted to overflate the price to make up that 10% difference. And I think you hit the nail on the head. Handshake deals happen, but they're always interesting, and it's a slippery slope. Once you start going outside the guidelines of what everybody's agreed to and all parties involved, it's a slippery slope. So we're kind of hitting on this, what we're seeing coming. Are you seeing a shift in self-funded versus venture-backed or investment-backed searchers?
Yeah, I do feel like for a little while there, we were getting, quite a bit of just investment money coming in. I think they were looking for where to deploy some cash. There's, real estate, it's kind of tough to invest in right now and make money with rates being high and values sort of being a little bit high as well. And then the stock market kind of being volatile. We were seeing people trying to find somewhere to park money. They were working quite a bit with buyers to help them find a business, give them the funds to go search, and then have them find something and then go from there. And of course, doing it without lending, without SBA, I mean, there's a whole world of doing that where groups are taking debt and equity, giving the sponsor or the buyer, the individual, a small ownership stake. They'd operate the company. They've got, certain metrics that they have to hit in order to gain more equity. If they sell at a certain amount, then they get a certain percentage of it. So you're still seeing that going on. But as far as what we're kind of, our world where there's, the transactions that are like 1 to 7 million, with that, we are seeing kind of it flip a little bit more to where we've got individuals that have more of their own cash that are exiting corporate America, or maybe they sold a business or some real estate or something, and now they're looking to buy a business. So a little bit less of the investors. And then with the rule changes that just went into effect, the SBA was not very clear, but it essentially said that the investors cannot have a preferred return. So basically what they were saying is they cannot have like a set distribution that needs to come in. And we were starting to see that. And I don't really like to see that. I felt like some of the terms reminded me of like hard money real estate transactions. And they're saying, you have to pay us back. First of all, they would charge a fee up front. Then they would charge, a certain guaranteed repayment every single year until they've been repaid. And the way I look at it is, well, it's almost like unsubordinated debt to the SBA, and they would do it as payment in kind. So if they didn't hit those payment metrics every year, it would roll to the next year. So you may have a buyer that owes, all this money in distributions, and rather than paying us back, they're focused on trying to keep up with that. And really what it's doing is choking the business, and it's not giving them the working capital they need to grow, and not giving them the cash they need to survive, really. And that's not what any of us want to see. I mean, I think the one thing that people keep forgetting is a lot of these buyers, they're more sophisticated, and they're a lot more conservative when it comes to the financial side. So what we all want to see happen is that they're successful, and in 5 to 7 years, they're coming back to the broker, listing the business again, and the financials are clean. You guys aren't having to sit there and go, well, let's have a conversation about crazy ad backs, right? You're going, hey, they did a great job. I'm able to push the multiple. Exactly. I'm able to get, oh, you need these reports. Here you go. That's exactly what they did. And so it's going to create an easier selling process down the road, theoretically. And, when you bring in an investor that's choking out the money or forcing them to sell, it's not going to go as planned. And so I'm hopeful that with these new rule changes, it'll go back to people looking at it as just kind of straight equity. As sort of buy and hold, or at least, not worry about getting the business sold until after they pay off the loan, or even repaying the shareholders. And then we'll see more of the investors that are coming in that truly want to help. Because that's a whole nother side that we are seeing, is that a lot of them will come in and they help with the financial side. They help with anything that's needed. It kind of gives them another set in their network to help with the business if they run into some trouble. And that's what we like to see. And that's what I'm hoping will continue to happen.
I don't know. It would make life a lot easier if you SBA lenders would just accept what us brokers consider ad backs, right? I mean,
we do our
who
best.
knows better than the guy making a commission on that high number what an ad back is? I mean, come on, Jerry.
Definitely.
So,
well, I mean, to that though, we've gotten better at it.
I think the industry has as a whole. Yeah.
Yeah, and part of what these search funds have brought to kind of small, medium-sized stuff is more of due diligence, right? So they're doing quality of earnings. They're bringing in attorneys. They're bringing in people that are helping with the due diligence. So one of the benefits of that is when they're doing a quality of earnings and they're really digging into those ad backs, they're proving them out, and it's way easier for us to accept them than just saying, well, I promised the seller, this is what they did. But if we have somebody that's spending 4 to 6 weeks and $10,000 to $20,000 digging into those financials with the seller, which, downside takes longer, right? The due diligence process is getting to be a little bit longer. But now if I can accept that $250,000 ad back, it's making the deals a lot easier. So that's one of the added benefits of it. And one thing I've been telling brokers too is get out ahead of it, play offense instead of defense. If you have a transaction with a lot of ad backs, or, if the guy built a house in Montana through cost of goods sold, then you need to validate it, do a quality of earnings up front. I know it costs money. I've seen brokers be able to charge the seller for it and explain it to them, hey, you spend this $20,000, I can get a quality of earnings.
Yep.
That's what your buyer is going to ask for. And then I can include this ad back, and you apply that to a 3.5 times multiple. This is how much you're going to end up netting off of it. So do that up front, work on, kind of setting up the listing in a manner that one of these searchers are going to ask for or look for. It's going to be a lot more attractive. You're going to get a lot more offers, and you're going to make the transaction a lot smoother on the back end.
Not to give our own podcast a shameless plug, but last month we had Bisworth and a couple other valuation experts on, and the general consensus is we need to start doing valuations a lot earlier and proving out these numbers before you even go to market. And there's a handful of shops that do it, and it's I can tell you we're one of them. It makes the transaction process a lot smoother. So,
and again, that's how they do it in larger M&A, and that's what you're just gonna keep seeing those all come down.
Yeah, they came down a while ago, and they're not going anywhere. So, let's talk about the dynamics between us as business brokers and the searchers that are coming out. How should we as business brokers be handling these searchers as they're coming into our pipelines?
Yeah, great question. I think the number one thing is trying to find out, do they really have the capital? probably the easiest way to do that is turn them over to your lender. Say, hey, are you going to get SBA financing? If so, do you already have a lender? Who are you working with? You guys know who the players are, who the good, SBA loan officers are. Reach out to them and kind of double check on what this buyer searcher is saying that they can do. If not, get them in front of a lender that truly does this type of lending, that has experience and knows what they're doing. Have them work with them and validate and verify what they're saying. And I do that every day. I don't mind it at all. You're feeding me buyers that might not buy your listing, buy somewhere else. I'm happy to pay referral fees for that. But on top of it, I'm looking at it as, okay, is this really a buyer that can close? I will immediately reach out to them, give them a personal financial statement to complete. I give them a video that walks them through the whole process. So I'm answering a lot of their questions. I give them a video on how to fill out a personal financial statement. We ask for a resume, and then we ask for bank statements to verify the capital that they're stating that they have. If they're saying that they're raising capital, we want to look and see how much are they going to put in themselves. And then also, have they already secured those funds? How secure are they? And so then what I can do is look and see, are they serious? How serious are they? And I can turn it back over to the broker and say, hey, I think we can get there on this. They've got enough cash, or they have the capability of raising it. They're already in talks. They've got X amount of money set aside. Go ahead and take them seriously. That's what I would say would be the easiest thing to do. The other thing would be to kind of negotiate a little bit better with them, because a lot of times they want exclusivity on an LOI for 60 days so they can do their due diligence. And it's tough to tell a seller, hey, I brought you an LOI. We've got somebody lined up. Look, I did my job. I'm doing great. And then at day 58, they pull the plug and say, yeah, we decided we want to go with something else. Doesn't make you look good. Doesn't help the seller with the emotional challenges of selling the business and also operating the business. So push back a little bit, tell them, hey, I need to find a way to make this a little bit more secure. Either it's not going to be binding or it's not going to be exclusive so that I can continue to bring in other LOIs, or I need you to speed up that due diligence process, or I need you to find a way to, maybe do some non-refundable, cash, or just kind of get on the same page and explain to them what your challenges are and what their challenges are. They want to spend time doing due diligence, but you want them also to be, be a little bit more secure that they're going to come through and close. And so there's got to be a way to figure that out.
That has been probably the only reason that we have opened up to working with searchers is we give them the option, a unrefundable deposit that goes straight to the seller in case you walk, or you don't get the exclusive. And we just tell them, look, we're tying it up. We're taking off market, would mean we're going to pass on other offers. So our seller needs to get something for that time, right? Yeah. And so that has worked well for us of saying, hey, look, it's one of the two. We're happy to do either one and work forward in good faith, right? But it is the awkward conversation that we've had with searchers and search funders of, look, man, you're in your own bucket. You're not a traditional buyer, so you don't get the traditional process of let's just hop in, right? The other thing that you hit on, because this show is designed for business brokers and we've got so many new business brokers coming into the industry, which I know I've talked to a bunch, we think is great. The rising tide lifts all boats. If you as bankers are probably if not the most important part, a very important piece of what we as business brokers do. And it is such a relationship piece. I can't tell you how many times I've gotten an offer from a buyer and I have called, just like you said, I've called the banker who's supposedly doing it and said, where are we at? And what you hit on, you said, we're good. They can do it. We have taken that and run with it and closed deals based off of our banker's word. And so y'all's relationship with us as business brokers, I think is one that I think we all kind of take for granted, right? Like we all have to do it. So we're all here, but the actual relationship piece with brokers and business bankers is just a massive piece that trust that you guys are going to get it financed. And on our side that what we're presenting is actually the deal that we're presenting to you. I know we have a little bit of blame there on that side with the ad backs and stuff like that, but it's definitely the relationship piece and being able to lean on someone like you and just say, hey, where are we at? Is this good? Did you actually sign this approval or did they find it somewhere? Because we've also seen that. So
yeah, definitely. Yeah, that's a good point. Yeah, I try to have a really good relationship with the brokers. Obviously, it makes things cleaner and easier. And there's been a lot of deals that I've been able to put together right away because I do have a searcher that's very well qualified that says, hey, I'm looking for XYZ in this region. And then I get a pre-qualification from, request from a broker. And I'm like, hold on, I have 2 people that want that right now. Here you go. And then they off to run and they're ready to go. So it does make a big difference. But yeah, feel free to lean on us. If you don't have a good lender, find one, make sure that they're doing a lot of transactions. They've been doing this for a long time. Their bank is successful and actually getting stuff done. I get a lot of buyers that are like, oh, my dad's friends with the branch manager down the street at this little tiny bank. And I'm like, you're going to lose your whole deal. Don't do it. At least work with both of us at the same time, so.
That's we will absolutely from the broker side look at who the bank is and who the person is, and if they're not using someone who is doing SBA loans on an activate, like we almost can't even take the offer serious. Let's flip it a little bit here, and because you're dealing with searchers a lot more than we are, and you're getting to them a lot sooner. How are you recommending searchers handle us as brokers? We are an interesting breed of individuals, and a lot of us are set in our ways. Some people have been doing this for 30, 40 years, and they kind of have their process. So how are you telling these searchers to deal with us as brokers?
That is a great question. I tell them all the time to not tell you they are a searcher. So that's
valid. That is 100% valid.
Yeah, that's the first thing I usually tell them is, look, to them, they discovered this crazy idea of searching and buying a business, even though people have been doing it for 50, 70 years, whatever it's been, And I tell them, be different. Don't use AI to give you a script that you're emailing to them. Don't call them and say the same things over and over again. Mm-hmm. Think about, you're trying to buy a business. At the end of the day, that's all you want to do, right? You have somebody that's in the middle that the seller has trusted to list the business to work with those buyers so that they can continue running the business, so that there's a little bit of protection there. And I try to get them to understand you have to find a way for them to trust you that you can close. And then also you need to find a way to connect with the seller. And most of the time, what we're seeing, especially in the decent sized transactions, mm-hmm. the sellers have a lot of offers. They have a lot of people that are interested in this business. And what they're doing is they're looking at who can they visualize running their company. It's probably the hardest part, I would say, for a broker is getting that seller to fully commit to sell the business most of the time, mm-hmm. because that's their identity, right? That's everything to them. Those employees are family. And so when they think of selling the business, they're scared to death that it's going to go to private equity. And the first thing they're going to do is get rid of the little old lady that sits in the front desk that probably mm-hmm. really runs the company, and wipe out, all of this goodwill that this individual has created for 50, 60, 70 years. And so find a way to connect with them, but be honest and authentic. Don't if you're going to come in and you're going to wipe out half the staff and you're going to try to automate everything and do everything, let them know, because that's one way or another they're going to find out, right? So same way of if the seller is not being honest about why they're selling, they're going to find out eventually. So
sellers would never do that. Okay, hold on, George. Just
oh my gosh, right? So that's a lot of what I'm telling them is, if you truly want to buy this business and you want to take it to the next level, let them know, hey, these employees are valuable. Let's try to set up an offer in a way that proves that. Find out what's important to the seller. If it is important to you as a buyer, definitely keep hitting on that and make sure that you guys are on the same page. But it's really just trying to get them to understand that using the big words and terms and changing around everything to try to sound cool or smarter or whatever, it for the most part annoys the brokers, annoys the lenders and the sellers, especially when you're dealing with a lot of people that are of retirement age. They've been real hesitant to make any changes or invest in some of these new concepts and changes. And if you come in right away and start hitting them with that, you're going to run them off. And so got to find a way to connect with them and get that seller to visualize that the business is going to be okay after you take over.
I think that's important too. So one of the things that we educate our sellers on is we tell them this is a two-way interview. You get to interview them as much as they get to interview you. And that are they going to fire the receptionist who really has the personal relationship with everyone who walks in? One, the likelihood is no, they're not. If they have any sports with them whatsoever, they're going to offer her a bonus to stay on and make those connections. But the reality is we can sniff that out over time, right? We're going to roll this thing 60 to 90 days plus after the offer. We're going to get to know somebody, and you can tell what their intent is for the most part, and who they are over that short amount of time. And so then you hit it on the head is they need to be real and personable with the seller, because if the broker's been around for any amount of time, they're educating the seller on, no, this is your chance to decide whether or not you want this person to run the business. Well, even though the buyer is going through diligence and looking for a reason they shouldn't buy and looking for all the things that are wrong with the business, the seller at the same time is looking for every reason not to give this business to them. And it's a mutual time of learning and figuring each other out. So
absolutely.
Let's kind of dive into last little topic here. Let's get into some of the SBA stuff. Big changes coming down, right? And I think we're all kind of aware of what's going on. But how do you see these changes affecting the landscape for the rest of 2025 and kind of into the foreseeable future? What are some of the big changes you see in it affecting? How's it going to affect acquisitions moving forward?
Yeah, no, great question. I think we're still trying to kind of figure it out, right, and see what's going to happen with it. But some of the major changes were, if the seller note's going to count towards equity, it has to be on standby for 10 years. So that's going to cause, kick out some of the buyers, right? That were maybe saying, hey, I can put in 5%. And sellers saying, I'm not going to carry for 10 years. It's too long. Yeah. I'm retiring, there's obvious reasons why they don't want to do it. So I would say that you're going to maybe see either some more investment coming in because people are going to need the capital, or you're going to see, more of those buyers that already have that capital, but they're probably going to be a little bit more selective on what they're doing when they're buying. They're going to want to do a little bit more due diligence. They're going to want to really make sure if they're putting up $300,000, $400,000, $500,000 cash themselves, that this is a really good transaction and it's something they want to move forward with. Some of the other changes that were pretty major was every single individual that has ownership in the business has to be a U.S. citizen or have a permanent green card. We have to verify and validate every single individual, 100% ownership. So when you do have investors coming in, if they're investing through an entity or a fund, we have to follow it all the way down until we get to every single individual. If there's one person on there that we can't either verify or they're not a U.S. citizen or a permanent green card holder, we can't do the transaction. So that is going to cause delays. That's where I think we're going to see is that transactions, if that is the case where someone's bringing in other people, then it's instead of being a normal kind of 60-day, it's probably going to be 90 because we're having trouble locating these people, getting their passports or their birth certificates, something we can do to actually validate their citizenship. And so it's going to cause delays most likely, unless of course you have just one buyer and it's real easy to see. But I think with the landscape changing and having more partners and investors coming in, then we're going to see more of the delays on that. And we're probably going to see some challenges if people were investing through an entity or a fund where there's 15 LPs, and now they have to go create another SPV in order to be able to eliminate that one person, and so it's going to cause some delays. Probably some of the other significant changes was that we were able to, for the last probably 2 years, year and a half, we were able to do where you could buy less than 100% of the business.
Yeah.
And even recently, we're able to do it as an asset purchase where they rolled equity into the new entity, just like larger transactions. That's gone away. Went back to, if you're going to do it, it has to be a stock purchase, and the seller would, remain on with their, equity, whatever percentage that they're, going to hold, whether it's, going from 100 to 5%. If they do that, they are required to guarantee the loan for a minimum of 2 years. I don't know too many sellers that are going, hey, I don't know this person from anywhere, and I'm going to go ahead and guarantee this loan for 2 years. There was some language in the rules as they came out that after 12 months of consecutive payments, the bank could let them out. Mm-hmm. We're still trying to understand that. I sort of put it as like, oh, they can be paroled on good behavior after a year. But as you've seen, I'm sure most of the time when you take over that business, the first year is the hardest part. You're usually a dip in revenue and then goes back up. So if we look 12 months later and go, hey, how are they doing? Oh, they're down 15% still. Maybe they're climbing back up, but they're probably not going to let them out. Yeah. So it's going to be a minimum of 2 years. So we were using that in order to get a lot of these deals done where there was a license required. And so that's going to make it more challenging. We're going to go back to how it was before, where it was a lot more difficult to get anything construction or trade related done because of needing a license. There's not a lot of buyers that are buying a $4 or $5 million company that have a license, because a lot of these buyers, again, are coming from a different world where they've been able to save money in the professional world, and now they want to come in, they want to buy a business. They're not going to be able to do it. So there are ways to try to get around it. One of the biggest things is trying to see if one of the employees has a license, maybe giving them, a couple points of equity, and trying to find a way to tie them down. So we're still working through that and trying to make sure we can still do it, but it's going to be a lot less of those transactions getting done on a smooth, easy basis. So those are kind of the major changes that happen. And then of course, what we covered with the investors having to, be a lot more transparent and kind of more just equity investors. So we may see some of them exit the game as well, because they can't get a guaranteed return, or they're not expected to get a return on capital for probably 7 to 10 years. All of it, kind of putting it together, it's probably going to cause deals to take a little bit longer to get done. They may be on the market a little bit longer as you look for buyers that have to kind of fit a little bit better into that box that the SBA is putting in. And it may lead to, a little bit of price reductions as people are trying to figure out how to get that 10% equity in instead of having the seller carry it. So I think those are going to be the things. I don't think that we're going to see any kind of crazy dip or stop or anything like that. I think we're going to still have business as usual. They're still, more popular than ever. People are trying to buy a business. We're still having a large amount of the population retire. As you mentioned, we're having more business brokers coming in. We hope to continue to see good business brokers coming into the market. So I don't think that we're going to see any kind of drop off. I would guess when IBBA puts out their or BizBuySell puts out their stats, we're going to see that probably July and August will be some of the slowest times we've had in the last year and a half, 2 years. But then I think we're going to go right back up, and that's kind of normally what we see. We have a little bit of a lag where people are like, "What do we do? I don't want to sell. I don't want to buy. This is crazy." And then they go, "Okay, actually, I do." And then it almost tries to make up for it. So. Yeah. September will probably be really busy, and then we'll go into the end of the year that way.
Cyclically, we're already seeing that of new listings coming on, so they're 90 days out before entertaining, and it'll be interesting. But as we begin to wrap up here, what are some of the most common mistakes you see first-time buyers making, and how can we as business brokers spot those ahead of time and help mitigate those? Right, so. I don't know, but you've even not just searchers, I think most business buyers that we're seeing in that sub $10 million market, they're first-time business buyers. And especially here in Texas, they're unrepresented. So they're doing it all by themselves, flying by the seat of their pants. And so we as business brokers generally have to step in a little bit more consultative role than we probably feel comfortable. So what are some of those big red flags that we can see, and how can we kind of help navigate that for them?
Yeah, that's a great topic and a great question. I feel the same way half the time. If there's no broker at all, like I end up being the broker in the middle, and I'm trying to get the buyer and seller, and I'm like, I'm gonna start charging broker fees on this, and then I understand how hard it is for you guys. But yeah, I think probably the biggest things that we're seeing and what somebody should be paying attention to is doing due diligence. Get good representation. If you're going to use legal, get an M&A attorney, not your brother, not your cousin that's a family law attorney. Get somebody that is truly an M&A attorney. If you need recommendations on those, reach out to the brokers, reach out to the good lenders. We all know who actually tries to get deals done, tries to work with the seller's attorney or with the broker to make sure that the transactions don't get drawn out and blown up. The other thing is read everything. We get so many of them that come in and they just sign an APA and then they go, oh, cool, I'm buying a business, and move along. And then all of a sudden, 45 days later, they finally decide, hey, maybe I'll have like somebody read this or have my CPA take a look at it. And then the deal stops immediately. You put all this time, effort, energy into it. It doesn't work. Or even worse, they close on the transaction. They don't understand what they got themselves into. So definitely read that. Have somebody help you that really knows what they're doing on the financial due diligence side. Having just going to a random CPA and saying, can you please look at this transaction is probably the worst thing you can do when you do that, because they don't know M&A. They don't know business acquisition. They don't know how to value a business. If I had $1 for every time somebody came to me and said, my CPA told me that this thing is underpriced or overpriced, and it blew up the whole deal, I mean, we could be done working at this point.
Yeah.
But so get somebody who truly does M&A due diligence to look at it. Obviously, get a good lender, make sure they know what they're doing. But those are some of the big things I think that people get themselves into trouble is they either try to do everything themselves by searching the internet, which is not a great place to find valuable information about what we do, or they're not using the right people to help them, or nobody at all. And so I know it's not always the answer that the broker wants to hear, that they've got an attorney and they're going to do a Q of E, because it does drag out the deal. But at least they're not getting themselves into trouble. And if it's good quality people, they're probably actually going to help get the transaction done. Yeah,
our big joke is don't use Uncle Joe who does DUIs, right?
Yeah.
Listen, there's guys who know what they're doing, and they're super valuable.
Yeah, it's the same thing using just a residential real estate agent to try to sell a business, right? Yeah. We could do a whole nother podcast on that.
Do a whole nother one on that, right? It's look, I love CPAs, love real estate agents, but it's hey, let's there's some separation there.
Yeah, stay in your lane.
Last question here and we'll wrap up and let you have some time. What documentation or prep work can we as brokers do with our seller clients to help make sure that we speed up the transaction time and it goes smooth? What can we do to help our seller clients?
Yeah, that's great. I have a seller questionnaire that I use, and most people do a good job with their SIM and getting some questions answered, but doing things like, having financials ready to go, make sure they're in the same format that they're filing tax returns. So if they operate on accrual, file their taxes on cash, have the cash financials ready to go. If you have kind of your own questionnaire, if you need one, let me know. But getting a lot of that information from the seller right away, even just their contact information or who's representing them. Do you want everything to go through the broker? Putting all of that together so that the bank can easily reach out to the right people. There's no delays. You're getting stuff, quickly and ready to go. Those are probably some of the easiest ways is just really understanding that. Work with them on their working capital. Find out what do they truly need from working capital. what's going to be included in the sale. If they're not going to include any working capital, there's not going to be any AR, anything, try to understand and ask them, where would you, or how much cash would you need if tomorrow you wiped out all of your AR and your inventory? And then that'll give kind of the buyer a better understanding, give the bank a better understanding of what's truly needed. Might also help the seller understand that you may get some buyers coming in asking now to leave working capital in the business that they weren't seeing before. So I think those are some easy ways to prepare them and try to get them to get things to move forward.
All working capital and all AR goes with the seller. I don't see an issue with that.
Well, as long as we're going to be able to provide enough and you're not trying to, get a 6 times multiple on it.
Listen, 6X, all working capital goes, all my add backs are in. I don't see an issue here, Jared.
All right. Yeah. We'll give you financials on a napkin as well. Right.
Perfect. Again, not an issue. So, Jared, I really appreciate you coming on the show today. So we didn't really talk about First Internet Bank that much, and how you guys are considered to be one of the more tech forward banks in the industry. The fact that you're sending out video introductions on how to do stuff and things like that is mind blowing in our industry. So why don't you just take one last moment, wrap up again, tell us about First Internet Bank, how people can connect with you if brokers are looking to get a pre-qual or if buyers are looking to see what they're going to finance for. How do we get a hold of you and what's that look like?
Cool. Yeah. Thank you. I appreciate that. I do have a podcast called Before You Buy or Sell a Business. It's all about just trying to educate people on both sides, buying and selling. It's a good reference point if you have buyers that have no idea what's going on. And same with sellers. Usually I'm walking through transactions. I bring people on as well that'll talk about their insights. So you can check that out. It's the same thing on YouTube, Before You Buy or Sell a Business. My probably easiest way, if you want to just email me, it's just jjohnson@firstib.com. Our bank's website is firstib.com. There's a little bit of information there about what we do. Feel free to reach out anytime. LinkedIn, it's just Jared W. Johnson, my LinkedIn. Usually I have quite a few videos that I'll put on there talking about the industry. Some of them I try to poke fun at people and try to keep it light. I've got a lot of them kind of saved up that I haven't put out because I've been so busy that I almost don't want to turn the marketing way on. But we've got some good ones, actually poking fun at the searchers and the brokers.
And about my back of the napkin with ad backs. I mean, come on, man.
Well, we'll definitely make a video out of that. But yeah, reach out anytime. I'm happy to help. I love pre-qualifying deals. I love looking at transactions. If you want a true honest opinion, I will definitely give you one. Also happy to help any new brokers if they want to understand how we look at tax returns, how we look at figuring out debt service coverage. Always happy to do that. The more educated brokers we have, the easier everybody's life gets. So.
Perfect. Well, Jared, thank you so much for hopping on today. We will link to Jared's podcast, his LinkedIn, all his information down below in the comments so you guys can reach out directly to him, and we encourage that you do that. If you enjoyed what you heard on today's episode, we would encourage you to subscribe. If there is a topic that you want us to cover, or if there is a guest that you would like us to talk to, please let me know. We are all about educating business brokers and buyers and sellers in this industry, and we are happy to do that. So thank you again for tuning in to the Texas Business Broker, and we'll catch you on the next episode. I'm your host, Josh Carnes, and that's a wrap for this episode of the Texas Business Broker. If you found value in today's conversation, make sure to like and subscribe below so you don't miss future insights from other industry experts. Have a topic that you'd like us to cover, or maybe a guest suggestion? Reach out. We'd love to hear from you. Until next time, keep closing deals and making an impact. Thanks for listening.